Hello friend, and welcome back to the daily update of 1000 days challenge. So this is the day 700, which is a very critical mark. So I'm just left with within 300 days left to go. So definitely I'm far off from where I want to be, but right now it is what it is. So I'm just going to push on it. But other than that, in terms of equity balance, nothing has changed. I'm not entering any trade right now for both my main trading setup and also experimental trade setup. So I'm just experimenting within in terms of the board testing of a few couple of strategies along the way before I relaunch them into the experimental trade setup, which I'll be monitoring it more on a closely basis. All right, beyond that, in terms of the equity balance itself, I did mention I was going to relaunch something this month itself. Unfortunately, things is still not ready. So I'm going to still take a couple more weeks or at least 1 to 2 more weeks ahead in order to revitalize or refinalize the key details that I'll be looking to test ahead. All right, other than that, doing a very quick update in terms of the market structure itself for the US market, things looks to be somewhat of an indecision with a red doji candlestick for both S&P 500 and Nasdaq. So I do lean towards some sort of an indecision along the way in the near term, say between the next few days or few weeks, or even a couple of months whereby we could consolidate within this low period itself. So that is not necessarily a bad thing, especially if we could consolidate and break above a new high thereafter. But that's also necessary to say that we do break above because there is also potential possibility that we could break much lower than that. Because if you look across the board for the US equity itself, we still have a lot of room for retracement, especially when we have only dropped 20 to 30%. So even if we do drop another 20, 30% off from the all-time high itself, we only have 40%, 50% drop. And I do think that even for US equity, we could definitely see a drop of between 50 to even 70% in the very severe bear market, especially if the potential of the strong inflation that could be very much long lasting than what people do anticipate. So whether or not it may or may not happen in terms of how bad inflation is and how it affects the companies and how the profit margin and how the investment goes would again be something that is yet to be seen. So of course, hopefully we do see much more of a peace in terms of the war itself, both in terms of places like Ukraine, Russia, and also in places such as in Sri Lanka and stuff like that, things to get a lot better. But until that takes place itself, we do see a lot of pressure in the market, especially if there's lack of the fear and uncertainty in the market as well. All right, on the other hand, for China market, like what I mentioned, even though things have not literally changed for the better, but I guess you could say that the market has sort of factored into the bear market itself, or the bearishness of it is no longer as severe, and the things has already been factored in of the worst case scenario, and that the price has dropped to a significant sum that there is a much of a room or incentive for people to sell off. It's basically like if a dollar and you're left with 10 cents, 20 cents, you probably wouldn't be much considering to sell it at all simply because it may be a little bit too low. So generally when it goes up to a dollar, or say you start with a 10 cent and you go up to a dollar and then drop to 50 cents, probably most people will be looking to sell there. But let's just say 50 cents is where you started. If you go up to a dollar, you could potentially look to sell there. If it goes down to 50 cents, you could potentially look to sell there to break even. But if it does drop a lot, significantly lower, like just 5 cents, 10 cents, just like very insignificant to where you put in the amount. So it may be less incentivizing for people to sell if people just hold it, even though there is no clear benefit to that. But because of that, that also drives in the lack of selling pressure as well. So yeah, even for short sellers, because of price being too low, they also wouldn't have much of an incentive to short it further. In fact, they will want to close their trade. So with short sellers leaving, the holders itself lack of a selling pressure, then definitely whenever there are new buyers coming into buy, then definitely price will be going up. So that's basically my understanding, or that's my explanation behind it. So that's what I do see in terms of China market, that very likely we have formed the long-term bottom itself, which means to say for the next 1 to 2 years, we are unlikely to form a new low in terms of my perspective, unless of course the government has a change in terms of direction on how the equities market will work. And then finally for Bitcoin itself, we did form a very supportive hammer candlestick today. And then we did also try it yesterday, and then we did try to break to higher high, but did manage to sustain. So I do think that we could very much consolidate between this 17.5K to even 20K region itself for much extended period than much more people than think. So potentially I do see Bitcoin consolidating be in the lower range, even lower than this for maybe even until the end of the year to even maybe the end of next year itself. So with 1.5 years to go, I do think this is very much of a good opportunity for me to accumulate a couple more Bitcoin if possible, and that will give rise to much more potential. If we do pick up in the next 2 to 3 years ahead, then that will be a very favorable position to accumulate. Otherwise, that's more or less about it. If you guys have any questions, feel free to drop by your comments below, and I'll see you guys tomorrow. Take care. Bye.